Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and those 10-year note yields a little lower today ahead of non-farm payroll. Actually, if you look at where 10-year notes are marking close to 286, that's about the midpoint of the 1 month range. So we're not really seeing a whole lot of momentum higher or lower. Yes, we are still targeting 3%, but obviously going to need some kind of catalyst to get there. And today's trade didn't see that, but obviously tomorrow non-farm payroll could be the straw that breaks the camel's back. And if you look at market volatility, we've seen market volatility rising over the last several weeks, even go back a month. It's been on the rise. However, we're starting to see a turn, and volatility marking a little bit lower while still elevated. If you go back to those 2017 levels, it was pretty anemic. So we are still seeing it elevated, which suggests the market's still pricing in some uncertainty. Some, needs more clarity, whether it be about the president's policies, Fed policy, global policies. Today we heard that the European Central Bank was maybe not going to be as aggressive at purchasing assets. Those kind of things are going to keep volatility elevated. However, it is starting to turn a little bit. Let's look at what the big news of the week. It's been all about tariffs and trade wars, but really that's kind of we haven't seen anything put ink to paper yet. And until we do, it's all going to be hearsay and rumors, and we should get that this afternoon. However, the big news of the week is going to be the jobs number, and we are expecting a solid number, about 200,000 non-farm payrolls with average hourly earnings up probably about 2.8% year over year, and those are going to be the keys. I think the market, though, may be overlooking that because jobs haven't been the problem. We haven't seen the job market showing any signs of weakness, at least up to this point, and next week's inflation data will really be the key to the March FOMC, which is the following week. So right now we're going to be looking for non-farm payrolls to come in solid. Even if we see a little weak or a little strong, I don't think it really changes things here. What really could change things is weak inflation or strong inflation. Likewise, if there's any kind of curveball that comes off the president's desk, that could also change things too, because equities, which have been leading the move across the board in the markets, really quiet today. We're seeing them trade close to unchanged. So with Treasuries yield slightly lower today, stocks are unchanged. The dollar's a little firmer as we wait for non-farm payroll tomorrow. But I really think, like I said, it's all about inflation the following week with CPI and PPI coming middle of next week. That'll be the focus. This is Todd Colvin coming to you from the floor of the CME Group.